Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all the domestic and global cues that you need to watch out for and also tell you about the stocks that you need to keep on your radar today ahead of the start of the D-Street session. But let's get started with an eye on the globe first and see how the US markets fared overnight. The US stocks stung wildly overnight as escalating trade tensions between US and China, they kept investors on the edge. Now, the S&P 500, that ended about 0.2% lower. That's after recovering from early losses that it saw in the session of more than 1.5%. The nasdaq too fell about 0.8%, whereas the Dow Jones Industrial Average, that managed to close up about 0.4% higher or 203 points, led by gains in Caterpillar. Now, markets opened lower over on Wall Street after China sanctioned 5 U.S. subsidiaries of South Korea's Hanwha Ocean, intensifying global trade tensions. However, later comments from U.S. Trade Representative Jamieson Greer added uncertainty, suggesting that new 100% tariffs on Chinese goods could take effect as soon as November 1st. So stocks reacted to all of that, but they rebounded sharply through a midday. But a late-day Truth Social post from President Trump accusing China of refusing to buy U.S. soybean, that sent S&P 500 back into the red. Now, Trump has also hinted at possible retribution, including a cooking oil embargo, which rattled the sentiment further on Wall Street. Now, despite the volatility, bank earnings that offered some relief. Citigroup and Wells Fargo, they jumped about 3.9% and 7.2% respectively on stronger than expected results that they reported, whereas JP Morgan and Goldman Sachs, they also topped estimates but slipped slightly. Now, the CBOE Volatility Index that also spiked above 22, which is its highest level in 4 months, reflecting renewed investor anxiety over the deepening US-China trade standoff. So that's how the US markets largely fared. But Srishti, how are things on the crude front?
Quite interesting, Kanishka, because the oil has actually slipped on the back of the US-China tensions. It's IEA outlook that has come in, which is definitely highlighting the trade tensions that they have. Yes, as of now, Brent crude is trading with gains of almost 0.5%. So not much of a movement, but yes, the commentary and the news flow surrounding is something that will keep crude on the move, and that is something that we will be watching out for. But other than that, it's the Fed rate cut bets that has definitely markets are penciling, and that has actually gone ahead and supported the gold prices as well, because today morning as well, as we have already seen gold trading above that 4100 per ounce mark, but for today it's again a 1% jump coming in on the gold prices, and the record run indeed continues.
Absolutely. So that's about crude and gold, but let's get tracking some of the other top global stories that we're tracking this morning. First up, the International Monetary Fund has raised India's growth forecast by 0.2 percentage points to 6.6% for the fiscal year 2025-26, as the country's strong growth momentum is seen offsetting the impact of high US tariffs on Indian goods. However, the IMF has lowered India's growth forecast by 0.2 percentage points to 6.2% for the next fiscal year. That it has said in a report that was released in Washington yesterday. Now, IMF's upgrade comes a week after the World Bank also raised its India growth forecast for 2025-26 to 6.5% from 6.3% earlier. This is while trimming its projection for the next fiscal year by 20 basis points to the 6.3% level. That, of course, is due to US tariffs. Now, let's listen into what the IMF officials had to say about these projections for the global economy.
So overall growth in the US has remained fairly good. It's slowed down from 2024, but it's still about 2% in our estimate for 2025. But the place where you can see that reduction in the labor supply is if you look forward and you think about what is the potential growth for the US. And that estimate, of course, is very imprecise, but our estimate of potential growth in the US has been revised down as well, and that's reflecting that lower contribution from foreign labor force that was quite significant in previous years, and we're not foreseeing that it will continue to contribute. Now, the other side of this is, what does it do to the rest of the world? Well, obviously, if you have slow growth in the US, per se, it's not a good thing for the rest of the world. There are spillovers that are coming from when an economy like the US is growing strongly. then it generates demand for other parts of the world as well. So something that is contributing to a slowdown in U.S. growth is, in general, not something that is going to be good for the rest of us.